Welcome, dear traders. We are watching a recap of the Asian session on August 22. As the Jackson Hole Summit in the United States approaches, stock exchanges are experiencing turmoil. For example, the Australian stock market plummeted to its 6-week low today amid the downturn in the energy companies. Investors in the region also remained cautious as the outlook for the Chinese economy was rather gloomy. Yesterday's rebound on Wall Street was offset by falling oil prices and a weak Chinese market. This time, Japan followed the Nasdaq index. In the US, technology companies posted the largest gains. Meanwhile, investors are preparing for the earnings report from NVIDIA, the largest US chip maker. NVIDIA will release its second quarter earnings report on Wednesday, and the excitement surrounding this event is understandable, given the company's 200% share price gain this year. Following a sharp correction in the sector, investors have been buying up shares, and Japanese technology companies have followed their US counterparts. Meanwhile, the anticipation of the Jackson Hole Economic Symposium sent the US dollar down, and the greenback has fallen from its 10-week highs despite US Treasury bond yields hitting new highs after the financial crisis. As a result, the US dollar index, which reflects its exchange rate against the G6 basket of currencies, plunged to 203 points. Despite this retreat, the US currency is still trading not far from its Friday high of 103.68. In Asia, the US dollar remains frosty as the Chinese policymakers failed to take effective action to support the crippled yuan and stem the ongoing crisis in the real estate sector. The greenback may jump to 104 if there are any hawkish hints at the Jackson Hole Symposium. However, the event will be held on a Friday, and today the US dollar index declined within the range of 103.10 and 103.40 in the Asian trade. The sharp rise in the US Treasury yields makes investors be cautious. The main event for Asian markets will be the speeches by Jerome Powell, Kazuo Ueda and Christine Lagarde at the Jackson Hole Summit on Friday. These speeches could provide insight into the state of the economies and signal the future direction of the monetary policies. According to the FEDWATCH tool, there is almost a 50% chance of a Fed rate hike in November. On Tuesday, the yen's 9 months decline ended. Even the high yields of treasuries, to which the Japanese currency is very sensitive, didn't stop the pair's exchange rate. In fact, the yield of a 10-year and a 30-year Japanese government bonds also rose to the highest level since 2014, supporting their national currency. In the Asian trading session, the dollar-yen pair was trading in the range of 145.70 and 146.40. However, the prospect of the Bank of Japan intervening has not gone away. The level of 146 remains a red line for traders after the Japanese authorities made their first ever currency intervention last September. On Thursday, the pair hit 146.60 for the first time since November 10. Notably, the Japanese currency began this week in a bearish territory. On Tuesday, its exchange rate against the greenback plunged to 145.70 in the Asian trading. However, the Japanese authorities have not yet announced any possible intervention. As a result, the yen was not on the agenda for today's meeting between the Bank of Japan governor and the Japanese Prime Minister, according to Kazuo Ueda. However, the main purpose of intervention in the foreign exchange market is to smooth the yen exchange rate, as the policymakers have repeatedly warned, and they will not announce intervention to avoid speculation and sharp fluctuations in the market. Therefore, the market may only learn about the intervention after it's implemented. The Australian dollar is posting green figures today, ending the Asian session not far from the high of 0.6445. The Aussie continues to gain momentum for the second day in a row. It strengthens on the back of a weak US dollar and the appreciation of the yuan. The Australian currency often acts as a liquid counterpart to the yuan, so the intervention of the Chinese authorities on the forex has also strengthened two antipodine currencies. In addition, the US dollar was affected by the statement of an analyst from S&P Global today. Yesterday, the outlook for several US banks was downgraded by this rating agency. Moody's analysts had reached similar conclusions shortly before. Against the backdrop of these factors, the Aussie managed to move away from its 10-month low of 0.6365 and continues to trade within the ascending range of 0.6403 and 0.6449 on the daily chart. The New Zealand dollar also received bullish momentum and closed slightly below 0.5960 in the Asian session. The Kiwi was trading in the range of 0.5918 and 0.5966. The New Zealand currency managed to remain above the 9-month low. However, the descending resistance line formed in early August at 0.5975 is limiting further gains for the Kiwi dollar pair. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is key to success in trading. See you online soon.